Minds of Market podcast is an exploration and deep dive into the minds of some of the best traders and investors in the market. Our goal is to help you, the listener, learn from some of the best out there to improve your knowledge and skill set as a trader or investor. The Minds of Markets podcast should be used for information and entertainment purposes only. The opinions expressed in this podcast are our opinions only. None of the information contained in the podcast constitutes a recommendation that any particular security, portfolio of securities, transaction, or investment strategy is suitable for any specific reason. Is suitable for any specific person. Trading is risky, and past performance is not a guarantee of future results. All right, welcome back, everybody, to Minds of Markets. And today, man, oh man, I don't know whether to call him, I won't call him my little brother because we don't really look alike, although we did grow up near the same community. We went to the same high school. Unbelievably, no, we didn't overlap. But this guy right here, who I am going to introduce in a minute, he is literally one of the best technical and charting traders that I know of. He's a high school dropout. Get that, guys. He's a high school dropout with no formal finance background. He's also a poker whiz. He once turned $100 into 150 grand playing poker online. And honestly, he got into this business because of poker. Trading was an easy transition for him because of poker. And he's gotten amazing success stories from his students. So I'm going to bring in, I am so glad to bring in Mr. Charlie Moon. And Charlie's always trying to stay ahead of the curve. And he now uses a really powerful AI trading tool to help him find high profit potential stock and option trades. Charlie Moon, man, I guess maybe we do look alike. We like baseball. We like football a lot. We love hitting the links together. How are you, man?
Doing great, brother. Go Cubs, first and foremost. And yes, it's funny how our backgrounds have merged. We came from the same neighborhood, same area, same high school. My background growing up was slightly different in terms of how I got into the market versus how you got into the market. But there's something that was really important that translated to both of our successes. We had great mentors. You obviously are one of my, biggest mentors growing up here. And the translation into trading was an interesting one, Scott. If you asked me what trading was before I actually discovered it, I would have told you I don't know. I didn't know what it meant to buy a stock.
And before you go into that, what I want to tell our viewers here is so many people, especially of our age, and yes, Charlie is younger than me, but so many people of our age got into this business without having a clue what the business was. Me included. When I first went to college, I actually went there because I wanted to be a doctor. I thought I was going to med school, and that changed really, really quickly. I had no idea I wanted to get in the world of trading. And even though Charlie's background is a little different, really the same kind of thing. So take it from there.
Yeah. And, for me, the translation really did come from poker. It's money management, risk management. It's assessing the situation on when to kind of hit the throttle and just hit that gas and go aggressive after it, and when to kind of hit the brakes and pull back. And that's really important as well. And, it's something that's always gravitated towards me is pattern recognition. When I first actually started trading, we were doing nothing but level 2 hotkeying, which means that we would just look at the bid and ask that were coming in. We'd look at institutional size orders and just try to step in front of them. And, those big bids were our stops, or those big offers were our stops.
And you say that. So do you think that those institutional orders back in the day that you could maybe lean on and count on, were they real? So if you were in, could you count on them to stop you out?
When I first started, they were 100% legit. And then they wised up because we started taking the market away from them, and they got frustrated.
Exactly. That's why I was asking.
Yeah. So it's called spoofing. It's technically illegal, but it's hard to prove it in the market environment, right? How could you prove someone had the intention of not fulfilling that order when they say, well, the market changed? Well, at the time Ben Bernanke said something, and we didn't like what he was saying, so those orders had to get canceled. And so it's really hard to actually prove that someone is spoofing, but what was really working well stopped working well. And that's where I got into kind of pattern recognition. That's really when I actually started looking at charts as opposed to just the trading dome and looking at the bid ask and trying to lean on those levels. And it's something that it's funny for me to get this job. Number one, Scott, on my resume, I actually put down that I played a lot of video games, and number two, I was very specific about my sporting background. You and I both have a very big sporting background. We're very competitive individuals, and I believe that's something that traders need. And it really drew their interest. The funny thing is, at my old firm, you actually put down that you had a finance degree or business degree, they would actually take your resume and throw it out the door. They wouldn't want guys with that type of background. So they wanted people like me who were fresh, that they could kind of just mold and build up. And thankfully, I got into charting, and it kind of took off from there. And, to this day, 15, 16 years later, I'm still really intrigued by, new technical advancements in terms of in terms of data, statistical analysis, charting analysis.
You are the chart master. I mean, if there's a chart for something out there, you've got a handle on it. There's no question.
And that's kind of my forte, is just seeing things and then having it come into fruition. I don't know what it is. It's something that I always tell people as well. When they're first getting into charting, remember, you're not trying to train your brain into this. You're training your eyes to recognize these reoccurring opportunities. And the AI machine is something that kind of takes all of the above and does the work for me in a matter of seconds.
Wait, what AI machine is that? Is that something new? What is this AI thing you're talking about? No, I'm just kidding. I mean, we all know that pretty much in every facet of our lives over the last, let's call it 12 months, 18 months, that AI, artificial intelligence, has started to play a major, major role in everything we do, including the markets. The way that I looked at it is, I wanted nothing to do with it, quite frankly, because, I learned this business literally from the ground up, in the pits, not knowing on day one when I was a clerk at the SIBO the difference between a call and a put. And that's why I feel I could dissect any situation, any option, any volatility, and break it down, because I've learned it from the ground up. So I never thought that, man, I don't want a machine, making a decision or helping me make a decision. I'm supposed to be the machine. But I've come to realize that not only can we have the best of both worlds, but that can actually take everything to the next level. And I know that's what you've been working on to help, what you're doing, and really just build out, your trading and your students. So now I want to hear all about it.
Yeah, Scott, you bring up a great point about the human element. And, ask anyone, show Scott an option chain, and he'll know exactly what kind of trade he wants to take. And it's the way that your brain is wired and how your eyes look at this situation. Now, the AI is more in terms of helping an individual, because we're not there yet with AI, right? AI can't make financial decisions for us. I wouldn't trust AI to drive my car yet. I wouldn't allow them to make life-saving decisions for myself or my family members. We're not there yet. But this AI tool is going to help us in terms of killing out all the back-end R&D that we do, because it could do automated back testing. It'll know all the scenarios that the market has faced, and it'll give us the hardline statistics and data. And really, the AI tool allows us to really key in on approaches for each individual stock. So you and I both know, especially with you being on the floor, that stocks aren't run by the same person all the way across the board. They're different trading teams that are focused on a certain basket of stocks.
A lot of people actually don't know that. A lot of people think that there is just an
One
entity
machine.
out there, the market maker, right? The market maker that kind of controls every asset class or every stock that we
Right.
trade.
So, Scott, you were a market maker at one point. How many stocks were you a market maker for?
Yeah. So at any one time, depending on the pit I was trading in, I traded 8 to 10 stocks at once. And that was
Right.
it out of the hundreds, if not thousands, that had listed options that were on the floor. So,
Right.
yeah.
And so, like, again, I guess that's something that I never thought of, that the retail public only assumed there's only one, two market makers here for the broad basket of stocks, but it's not like that. And we're also talking about trading pits with a bunch of traders and a bunch of individuals and a bunch of institutions. And yeah, some of them can, piggyback if they see, I don't know, Morgan Stanley come out of nowhere. They haven't laid out a multi-million-dollar trade, and all of a sudden they're throwing $10 million at a stock. So yeah, other traders on the floor may piggyback on that. They do it in the CME pit in terms of futures. But, this is where we have to kind of understand that stocks have their own kind of trading behavior, from the retail aspect to the institutional aspect. And not every trade setup is going to work effectively for every individual stock, even though there may be some commonality. And this AI machine has really broken down, for example, one of my setups that I have developed and have scanned for, it works great for a stock like Google, and it hasn't done well for a stock like NVIDIA.
And
Again,
why is, why, if it does all of the back testing, right? And to me, that's the really important piece of this, is that it has a significant amount of back testing, not just a couple months, but back testing that has taken us through different ebbs and flows of the marketplace and different sentiment in the marketplace. So why do you think in this specific example that it looks really good for a Google, not so much for NVIDIA?
and you brought it up. The market circumstances of when those situations happen play a big role. Specific sentiments on sectors could play a big role, news-driven moves. This market, especially since COVID, since 2020, has been hitched to being news-driven as opposed to being, I guess, fundamentally driven. And even prior to that, we could say we were kind of reaching, a little too high because everything was going up until COVID. We were on a pretty much 10% rally straight into January, February, and then COVID hit. And then obviously we know what the market did. It reset, and then it rallied back, and it rallied substantially back. And then we had to face kind of the back and forth volatility of 2022. And then look at this year. Everybody expected this year not to be a great performing year. And next thing you know, the NASDAQ's up 30%. And so it could be based on, the environment and the circumstances that were surrounding the situation. And regardless, I don't really play too much into what's happened, but I definitely want to always backtest within what's happened in the last 6 months, which is the recent sentiment, the last year, which is a historical critical level of reference, the last 2 years, and then the last 3 years. That's really a lot of my back testing has been. The market dynamics, the market participants, pretty much the market in itself changed dramatically from 2019 to 2020. And so this is me just being more in relation and in line with how the recent market performance has been and what's working in the current market environment, which is certainly a lot more volatility and news-driven movement as opposed to what happened prior when we're in the strongest bull market that the history of the stock market had seen over the last 15 years. So, we got to kind of pick and choose. We got to understand the relative environment that we're trading in. I have a saying that I always say to the students: you have to adapt or die. You get left behind. It's always been like that with the stock market since, it's been created. If you don't adapt and you don't go in relation with the markets, you're always going to be left behind.
Yeah, look what happened, with the advent of floor trading going by the wayside. And for those of you out there that don't know, yes, there is still some live floor trading. In fact, I'm down on the floor of the SIBO few times a week, where S&P 500 options still trade live and VIX options trade live, Russell options. So there is still some live trading. But to Charlie's point about being able to adapt, I would tell you that probably 9 out of every 10 traders that I knew from the trading floor that had traded for a really long time could not make that transition to trading on the screens like we all do now. Different skill set, just totally different mindset, to be quite honest with you. So yes,
Totally.
absolutely
Totally.
do have to adapt. So let me ask something. I don't want to disparage anyone, but let's say the younger generation of traders, Gen Zers, my kids, in 20s, and God, I can't believe I have a son almost 30. But this generation of traders, I would say more so than at any other time that I've been in this business, they want to be spoon-fed, right? They don't want to do all the hard work. They don't want to do the due diligence of charting, and they want something to tell them what to do right away. So it kind of sounds like maybe AI can do that, though I have my reservations about that. So the machine, the tools that you're using, the AI tools, how do you actually use them? And then how do you take that information and then put it to work? I can't imagine that all you're doing is saying, hey, Mr. and Mrs. AI machine, I want to be short Tesla today. Tell me what the best strategy is. I can't imagine that's the way it is it?
Well, okay, so that's a great point. We have actually two different generations, right? We have the older generation, which tends to be somewhat stubborn and or are very afraid of the current market environment, right? And then
I'm
we
not
have
afraid
the
of that.
young generation who is either, like you said, wanting to be spoon-fed, or they are very inquisitive and have a lot of different ideas. So I actually want to share my screen here. Let me pull this up. I can pull it up right here. Okay.
Oh, it's not going to appear on that cool background of yours?
There you go. So you should be able to see
Oh,
my screen
there we
right
go.
here. Now, it's a web-based browser, number one. And what it's actually going to do is feed you names that fit under specific conditions. This actually takes a lot. This is beautiful in the sense that it takes a lot of the human element out of it, meaning emotional thoughts. These are preset conditions that have shown a strong historical reference of success. And it's not
And we'll
just
get into this
success.
later. Excuse me. And I know I always interrupt. Forgive me. It's a bad
No
habit of
problem.
mine. When I think of something, you talked about that emotional side of trading. Boy, oh boy, for any trader, whether you're brand new, been doing it for a few months, years, or whether you've been doing it for 40 years, if you don't take emotions out of it, not going to
You're
live to
right.
fight another day.
Well, it clouds your judgment. It makes you freeze up when you should be aggressive. It makes you overly aggressive when you should be patient. It kind of like short circuits the way you would quote unquote normally operate. And, when we, especially us, right? When we look at hardline statistics and data, for example, there was a setup in ADP that was showing a 72% rate over 5-0, meaning they took 5 trades, they were 5-0. That's a high level success rate. RL as well. RL, Ralph Lauren, showed a 167.9% on a 7-0 trajectory over the last 3 years.
Let me
And
ask you something,
again,
since I'm not so familiar with this. That is under what I'm reading here, what I'm seeing here, a strategy called fade the dip, where I'm assuming this is some sort of position you would take on after a stock has fallen for whatever reason, and maybe it's down to certain support area, a high volume area, something like that. Is that right?
right. So what it's actually doing is that this would be a stock that you would reckon, or this particular setup that you would recognize that's been down and it's starting to make a strong move to the upside. And so part of the conditions that are involved would be the stock getting above the 10 EMA on the hourly chart and breaking above the 200 SMA. Now, that 200 SMA is known as technical failure. It's a major threshold, right? A stock underperforming their long-term performance. So when stocks start recovering above these thresholds and start making these moves, they could start getting really explosive. Number one, it changes retail sentiment and institutional sentiment. And number two, in terms of price performance, short-term traders will always look for these breakout plays above this critical resistance and or support level. So that's what this guidance is. And again, over the last 3 years when this has taken place, the performance has been 7-0. Now, there's other conditions that we don't want to, outline right now, but there are also ways that you're going to approach it. This AI machine is not just telling you to buy, it's telling you to buy with certain circumstances, or there's a specific way to trade it to allow you to be in the greatest position of success. So what this is doing is going through reoccurring scenarios, taking different types of trade setups, right? Different spread plays, maybe straight up directional with a naked call, maybe just buying the stock. And what it's doing is pulling all the data and saying, you know what, under this circumstance, under this historical behavior and reoccurrence of this behavior, this is the way that you should approach it. This is what's going to allow you and put you in the best position of success. And this is going to allow you to actually make those rewards a lot more consistent than, let's just say, buying the actual stock itself. So we have these names that show up. And what you could really do is actually click on that name, and you could actually see the outlines that have taken place. You could actually, when it loads up, will show you not only when they've occurred. So we pull it up here, you can see the actual dates when they have occurred, and you can see there's 7 pages of data. It'll also show you the P&L, the overall results, good or bad, and all of this is going to be weighted and let you know exactly what your actual return has been based on those circumstances, the overall performance and average return rate, and your win-loss ratio as well. So when you think about this, right, and you go back to the scenario where you're like, okay, well, I'm looking at it and it's 7-0 with this type of return rate. Is it going to be worth my time? That's where I'll actually pull in the chart and look at the chart, like in this scenario, and say, is this a trade that I'm going to take? Well, based on what we were looking, we needed to break out through 120. So I was actually helping people have a true understanding of where the breakout has to occur. And I said, well, for this to be a viable play, it has to remain above the 200-day moving average. So for me, it failed, and it did not close above that key level, which it's actually designated that it has to. So if you're following a rules-based system and you take this trade, you didn't follow the rules. So this is actually something that's, if we rally up tomorrow, we'll probably set up on the scanner as a reminder. And again, if the conditions of 120 breaking and remaining above 117, we're going to see RL make a big move. And in fact, if those actually play out well, I actually think that RL will have its best return out of all those trade setups based on how the chart is structured.
Can I ask you something, since I'm learning also?
Yeah. So this is where the human element comes in.
Right.
We have to analyze the totality of the situation and say, is this, even though the data is all lined up there for me, something that I should be taking in this moment?
So when the machine, the AI machine, gives you the setup, right? Mm-hmm. Have you already put in the parameters that you're looking for? Or is it already looking back on its own and saying, okay, these parameters are there now, the same as they are in the current market environment. This, based on those parameters happening, is what you should do? Or are you presetting those parameters?
So there's both, okay? So I actually do have...
That's not the answer I wanted.
Well, I have presets, but they already have specific methods that they have found to be highly successful. And so we could absolutely utilize those. So let's say we're looking at the NASDAQ 100, and I'll actually pull up my scanner, which is based on a short-term opportunity.
And we know people love trading the Qs. That's for sure.
So this is actually, Scott, what it's going to do is go back and back test all 100 stocks in the NASDAQ 100. And what it's going to do is give you the totality. Okay, this is on Apple. There you go. The totality of all of the setups going back since 2021 on a 14-day expiry. So remember, I mentioned
These could be, excuse me, these could be bullish, bearish, neutral. This is just
These will be
all,
bullish setups in
these are
terms
all
of this
bullish. Okay.
particular scanner.
Oh, I see.
So you could
50
see that
delta call.
NVIDIA, Netflix, not great results, but Google, Meta, Amazon, Microsoft. So you could see that this AVGO, Costco, 7-3 win ratio, overall return rate of 162%, 231%, etc. So why do I want to forcibly take this trade setup in NVIDIA when history says it's 3-5 with a negative return? You could see that even in the totality of the 100 stocks, my win ratio for the scanner is at 51%, but the total return is $50,000.
So that
in terms of gains and risk,
that's incredibly impressive because most people will think, and we get asked this all the time, what's your win-loss ratio, right? And if you're not at 55, 57, 58%, people just kind of look the other way, right? And many people, especially if they're starting out, don't realize that it's not just the win percentage. What you do with those wins versus what you do with those losses.
So I always say to people, do you want to work really hard for a little amount of money, or do you not want to work as hard but make a lot more? For me, if you're trying to grind it out and constantly put pressure that you have to win 70, 80% of the time to make money, that's the absolute wrong way of doing it. You're generally putting yourself in positions where reward is limited and downside risk is larger. And you actually put yourself in a position where you're actually very likely that 1 or 2 losses could bring your P&L way down. Whereas I like to teach people, right? We are humans. We're not going to be perfect. Let's win somewhere between 40 and 60% consistently, but have our P&L be outstanding because we're putting ourselves in a greater position of success.
Were you a 400 hitter on your Maine East baseball team?
Do you really want to know what my stats were?
Yeah, let's lay it out there.
I was 400. My ERA was sub 1.5. I threw 2 one-hitters at varsity. In my first year as a freshman, I only had 5 varsity games because they didn't allow us to play initially. And in fact, Maine East was so bad at baseball, they didn't even have a JV team because we didn't have enough players. That's why we were brought up to me, Alex Ellis, and Brian Vanderbilt were brought up to varsity. And varsity at the time, I believe, they were 0-for. I think they lost the game like 42-0 to like Niles West.
Don Olson still the coach?
It was not the coach at the time.
Okay. Anyway, sorry, folks. Charlie and I like to relive our glory days all the time. But
and again, Scott reminds me that his face is on the wall at Maine East and not mine. Just so you guys know. But again, so we break this down right from a statistical standpoint. I don't want to focus on NVIDIA with the setup because the outcome is that it's not going to work for me. And maybe, there's something in the back of your head, be like, this one time it might work. No, the data says it won't work. That's the human element we want to get rid of. So let's focus on the ones that have done well. And then when this situation arises, we take the thinking out of it. We already know that the data says this is going to be good for these setups. So I'm just going to take a handful of names that I've checked off here. And all I have to do is click add alert. And when I click on add alert, all I have to do is finish it up and boom. Anytime these conditions for these stocks set up going forward, doesn't matter, it's a year from now, 2 years from now, I am going to be alerted on this and I'm going to be able to take advantage of it. I talked about how I was alerted for Apple. I was alerted for Apple at 169. Apple closed at 182. This was about 7 trading days ago. I was alerted for NVIDIA at $419.
You were pounding the table on NVIDIA. I remember that one.
And then it jumped to 482s. And that, again, this was 6 trading days ago. Visa was another one that ended up rising up here Visa had the same conditional alerts. It actually triggered right around 2:35 and then ended up at 2:45 within several days. Now, I don't want us to think that every single trade is going to be like this, but the reason why we wanted to be alerted, the reason why we're focusing on these setups with the way that these stocks have moved is because of the historical data. And guess what? It reigns supreme. That Apple alert, by the way, was the one that I just showed you on the back test. So it hasn't fully incorporated the new data on that back test, but Apple, I believe, was only showing like $722. It's going to show a much greater return because of the recent result. Obviously, when Apple jumps $10, especially nowadays, that's a huge move for Apple.
Massive move.
Something's going on in ANET, by the way. I don't know what happened.
So what I find, I think, from my experience being an old-fashioned trader, I call myself an old-fashioned trader. I am. If it were up to me, I'd still be on the trading floor using cards instead of a computer like everybody uses, right? But I have come to realize also that this can absolutely take what I know and what I do best and make it better. In a world where things move so quickly, right? Market conditions change on a dime. Boy, any kind of added help like this that has that back testing, that's amazing. And I am so excited that you're using that in your daily trading now. And obviously, a boatload of your students are as well.
Yeah, and Scott, it speaks to our backgrounds because I've never traded on the floor. I've been around the floor. I've been sponsored by CME to speak for them as well. You came directly from the floor. I've always traded behind the screen. I don't want to say that it was like the boiler room, but I was in a room. It was pretty much everybody in that room was around 28 years or younger. Just a bunch of crazy, like young, men just slamming their keyboards. We actually, it was very common that you could hear keyboards getting crushed and destroyed throughout the day. In our supply closet next to our server room, we actually had stacks of keyboards. It was very common. And again, you take a young 23, 24-year-old trading big money and losing big money. Yeah, I mean, what's their reaction? It used to be, you would hear about kids punching holes in the walls and stuff like that. They would do that with their keyboard. It was almost a rite of passage that you had to break a keyboard at our firm.
That's unreal. And these are like you started out. These are young bucks.
Yeah,
who came from playing video games. Not someone like me who grew up playing Atari and Space Invaders.
I played Atari, man. Come on.
So that's unbelievable. So far since you've incorporated the AI tool into your trading, what have you seen it done to your P&L? I mean, that's what people want to know. Bottom line, has it really improved, the performance that you've shown?
So since we've actually started, I've called 3 different setups, right? 2 and 1 so far. In fact, I was actually 3-0. I had 2 shorts and 1 long. And the long was actually up around 15, 20% until this market absolutely got tanked today because of the 30-year bond. So we were actually, it sounds crazy, the shorts were actually working while the market was running up and the long was doing well. So the long ended up getting stopped out at the end of the day, but guess what it did to the shorts? The shorts absolutely crushed it. Totally crushed it. I missed the Visa signal. I wanted to take that in my room, but others in the room took it. They absolutely crushed it. They took Apple, they took NVIDIA. I wasn't able to get these signals out, unfortunately, but the people in the room took it. And right now, the only loss that I have taken since I looked at the AI tool and started incorporating it was the AMAT 7-day long call, which, by the way, if it shows up tomorrow, it's probably another trade and you could probably make back if the markets go up what you ended up losing, because history says AMAT was 5-1 with a huge rate of return. And when we look at the charts and see that run up in AMAT, it's almost like on point with what it's been.
All right.
So
So we've
again,
got, sorry. So we've got, talking about markets, 6, 7 weeks left in the year.
mhm,
Okay. We're almost through the end of this earnings cycle. We got another week or so, but most of the big guys are done.
yeah,
We don't have really any huge data coming out for a few weeks. We do CPI, PPI, but really the next big piece is probably after Thanksgiving, and it's going to be the November jobs report. And then we have the Fed again. So what is this market going to do? Is it going to, maybe a little pullback and then run into the end of the year? Are we going to get Santa Claus rally like everybody thinks we're going to get? What is your take? Because to me, it's really a crapshoot. Yes, history is on the side of the market going up from here. Who knows?
yeah. Actually, I love that you said it's a crapshoot because that's my answer. Honestly, it's probably tinged a little bit more on the bullish side because of Powell's comments from the last meeting. But I gotta be honest with you, it's almost as if like the jobs data, CPI data won't matter as much based on how the 30-year auction ended up causing this market.
Boy, bonds are really driving the equity market, aren't they?
Yeah, and it just seems like the focal point is getting more and more on the bond market. And one of the things that I'm really worried about, and I'll say it right now, is that if we see the long dated bonds start catching a bid, like 20-year, 30-year being bought up, and the market is tanking, that's a really bad sign. That means that potentially capitulation could happen. Historically, that's never been a great sign for the markets, and that's all I'm looking for right now. As long as that's not happening, we could deal with the ebbs and flows. We've dealt with it last year. Look at how hard the markets were swinging. It eventually started breaking down. We basically bottomed out towards the end of October of last year, the middle of November, maybe even towards the late end of November, and we just started going up since. So can that scenario play out again? Perhaps. Everything's so oversaturated, overbought. Yeah. We're so elevated. The market just likes to make rallies for 7, 8 straight days up, and then it'll be like 7, 8 straight days down. And if we get into that modus, we just have to start timing the rally and the drop a little bit more effectively. I don't think we're going to make new 52-week highs. I don't think we're going to go visit the October lows, but I do think there's going to be a lot of volatility. And I think a lot of this is, again, just fly by the seat trading. We have to wait for the news. What's going to happen in the Middle East? What's happening in Russia? It's almost like nobody talks about Russia and Ukraine anymore.
Yeah, right? Seriously.
Right? Because of what's happened in Palestine and Israel over at Gaza. And then we have Jerome Powell. And then we have all the FOMC members. And then we have all the data. So it's just fly by the seat trading. That's what a lot of this has been this year. We're certainly getting more and more into it right now. And that's just kind of what we have to deal with here going into the end of the year.
Yeah, I got to think a lot of fund managers, even retail investors, if they could just shut it off right now for the year, they'd lock in their 30% plus gains in the NASI, 15, 18, whatever it is, and the S&Ps, and just say, you know what, wake me up when January 1st or January 2nd hits, and let's start all over again.
Well, it'll be fun next year. They're going to cut rates. When did they start pricing in? July, June?
Yeah, it's going to happen sooner than that, in my opinion. But we can have another discussion on that.
I mean, we'll see. March, why not? If anybody wants a little clue in terms of the guiding light, look at IWM. Look at the Russell. The Russell is going to lead us the way. Growth has always led us the way, but especially now. And the Russell tanking below last year's October lows was pretty alarming. And then it started racing back up. So we'll see what happens, right? It's all about the Russell now.
All right. So to wrap it up, and this is just wrapping it up temporarily because we could do this forever and ever. If there was only one thing that you could, convey to traders and investors that you do on a daily basis with your students to help them improve their performance, you're on the spot. What would it be?
Honestly, tighten up your losses. The wins are going to come.
Great.
The problem is that people tend to get very stubborn because they don't want to lose, right? There's not too many opportunities in life where you just kind of lose $200-300. That's why some people tend to avoid the casino, and then they see that on their trades, they're like, oh, it'll bounce back. And when we talk about the extremes and the volatility, especially when you trade options, there's a point where it's never going to come back, right? With stocks, you always have that ability to have it bounce back. You preach, right? Protection, 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 right? When you take trades, there's a maximum drawdown.
Yep.
So people know what they're getting into. But I feel like there's so many new participants who don't know what they're getting into that they decided to skip, trading stocks and focus on, in my opinion, options are risky when you don't know what you're doing, right? They're not risky.
That's why we're here. That's why I'm here.
They're not risky if you know what you're doing, but if you don't know what you're doing, it is the absolute biggest risk that you could take in the market environment. And so for me, it's pretty simple. Get smarter about your money. It doesn't matter if you're down to $20, save that $20. For every $50 that you allow yourself to lose extra, right? Say you're like, if it gets to $150, I'm going to lose it, right? For every $50, you think about how fast it compounds, right? $50, that's once a week. That's $200 a month. And then you weigh it, all of a sudden, that's $2,400 at the end of the year. That's $2,400 out of your profits that you're taking out, or if you're down for the year, that you have lost out of your actual capital. So every single dollar, when we say that, it matters, right? Even salvaging $20, it matters in the long run. So just keep it tight, folks. There's always another day. There's always another way to come fight back. Some days it's just not our days, That's just how it is in the trading world.
You make a great point, and I'm going to go off topic here for a second, because one of the most sensible, inspiring books that I have ever read, and it's not a finance book, it's not a markets book, it's called The Compound Effect. I don't know if you've ever heard of it. Okay. And basically what it talks about are life scenarios where little bits and pieces compound and add up. And that's basically what you were just talking about right there. So that's a push. I don't even know who the author is. If anybody wants a good read, The Compound Effect,
Google it.
Yeah, go to Amazon, order it on the Amazon bookstore, Barnes and Noble. But Charlie, man, you are the GOAT. You are honestly.
I work for the GOAT, which is you, man.
You are awesome. I know we could do this endlessly. Where can everybody find you?
My social media at Disciple of Trend on Twitter or X.com, Instagram, prospertrading.com is another one. Check us out on the YouTube page. We drop a lot of information, trade ideas, trade setups, etc. Information, infotainment, whatever it is.
Investotainment.
Yeah, there you go. There you go, brother.
Yes.
Yep, that's it.
All right. Thank you. God bless, man. I love you. Everybody, thank you so much for joining. This is The Minds of Markets, and we'll see you next time.